Bloomberg Audio Studios.
Podcasts, radio, news.
An earnings palooza, looking at shares of Meta platforms right now. They are lower in the after hours, but not by much. They were bouncing around a little bit, but now down about 1.1%. We got news that the company sees fourth quarter revenue coming pretty much in line with estimates, $45 billion to $48 billion. Mark Zuckerberg himself calling it a pretty good quarter, in the press release. Let's see what Mandeep Singh has to say about that. Mandeep joins us here in the Bloomberg Interactive Broker studio. He's Bloomberg Intelligence Senior Technology Analyst. He's looking at these numbers. What sticks out to you, especially in the wake of what we heard yesterday from Alphabet?
Yeah, I think most of the numbers that I see are in line with expectations. I mean, the one thing is ad pricing. So ad pricing continues to tick up. If you look at this quarter, I think it was around 11%. Impressions went down a little bit. And it's just a function of how well they have been executing in terms of, implementing generative AI and really making changes that compared to Snap, who reported yesterday, we saw Snap's ad pricing decline. So, that just goes to show at what scale they're operating.
Can we really compare the two?
Well, I mean, digital ads is a function of how much you are better in terms of targeting versus the other platforms. So Google search, ad pricing grew 7%. Meta platforms, ad pricing grew 11%. Snap ad pricing down 7%. So it just goes to show it's easy to monetize on Snap, but you are not getting the ROI. In the case of Google and Meta, you are getting an ROI on your ad spend, and that's why advertisers are willing to spend more. So it's a function of scale, but the effectiveness is there, and that's evident in Meta platforms.
Okay.
Yeah.
I want to talk about all the kooky things that they're still spending money on. Reality Labs posting a $4.4 billion loss in the third quarter. Its revenue did rise 29% year over year to $270 million in the third quarter. That was actually below analyst expectations. $4.4 billion. What are they doing over at Reality Labs?
I mean, we know it's the investments in the VR headsets, the Ray-Ban glasses we have talked about at length. And look, I think they will always be a drag on the overall operating profit, because even if they sell, hundreds, thousands, millions of these, the margins will never be comparable to their core ads business, which is north of 50%. So hardware is a money-losing business for Meta right now, and that's what's evident in that $4.4 billion loss.
One of the headlines coming out of these numbers, Meta still sees significant capital expenditures growth in 2025. I feel like I'm talking to someone right now about the Federal Reserve minutes. What does, quote, significant mean here?
Help us.
Well, so look at how much the CapEx grew in 2024 so far. And we're talking about already, a 20% bump. In the case of Microsoft, it's 50%. So significant could be 50% from, 40 billion this year, and that would get it closer to 60 billion. Now the difference between Meta and Microsoft is the capex intensity for Meta is already north of 20%. Normally for large tech companies, capex intensity is like 10 to 15%. That's where Alphabet is at.
So where are they spending this money? Katie mentioned that about 10% of NVIDIA's revenue comes from Meta platforms, about 20% coming from Microsoft.
Yeah.
Where does Meta spend this money next year?
It's going towards GPUs. I mean, it's every large tech company right now is looking to build bigger data centers where they can train their AI. And Meta has that distinction of owning a large language model. Their Llama language model, which they didn't mention a lot in the release, but it will come up on the call. And they have talked about Meta AI having 500 million monthly active users. That is powered by Llama. In fact, there was some talk about Llama being licensed to an Amazon AWS. So they could start monetizing that. I mean, there's no mention of it in the press release, but we will hear about that on the earnings call.
I want to talk a little bit about the share reaction. Meta shares currently down over 3% right now, but I mean, it's been an incredible run for Meta. You talk about price to perfection. I don't know if perfection exactly was priced in, but the bar was certainly high for this stock.
And look at the multiple. The price to earnings multiple of Meta is 25 times forward earnings compared to an Alphabet, which is still below 20 times forward earnings. So clearly, there is that gap that Alphabet could catch up to these guys in terms of multiples, and Microsoft is close to 30 times earnings. So when the setup is such that expectations are higher. I mean, Microsoft had 34% growth in Azure. Still, that wasn't good enough to drive up the stock. So that's where expectations come into play.
You mentioned Llama and a potential integration. Explain to everyone what Llama is and how Meta Platforms is actually using it outside of sort of internally. I mean, I don't know, am I seeing Llama when I go search on Instagram, when I search on WhatsApp?
Yeah, so
is that Llama?
We've started hearing about Meta getting into their own search business.
Yeah.
And look, Google and Meta have that distinction of owning their large language model, whereas everyone else is dependent on OpenAI or Anthropic, which are independent companies. So in the case of Meta, they've had a lot of success. It's like Llama is on 3.2 release, and every release is getting better in terms of the native capabilities.
But can I download Llama as a standalone app right now?
No. So this is a
like
large...
I can't download it like I download ChatGPT and use ChatGPT.
I mean, they're looking to go towards that model where you can use Llama in that form, but right now Llama is just being deployed across their family of apps, which is Instagram, WhatsApp, and Core Blue app. Again, owning a large language model is such a huge moat. And that's where, all these companies spending on data centers, the compute capacity, what they're looking to do is to really build on that large language model moat.
There you go.
There you go. Mandeep. We should let him get back to work.
He's
got a call to listen to. He's got a report to write. He's busy after Alphabet and Snap yesterday. We made him talk about Reddit. He didn't even know he was going to talk about Reddit yesterday. We made you go everywhere. Mandeep, thanks so much for joining us. Really do appreciate it. Okay, so Meta Platform shares moving in the after hours. They were down as much as 3%, now down about 2.7%. Katie, help me out with Microsoft and what Microsoft is doing.
I mean, I think it comes back to those high expectations as well. You see shares right now. It was a pretty clean quarter overall, and can't seem to quite get off the ground in the after hours trade. We've been toggling around 34 times earnings. That's what it's trading at. That's a pretty high bar, Tim.
Yeah, it is. Microsoft Cloud's computing business, the Office software, fueled stronger than expected quarterly revenue growth. It's a sign that the company's heavy investments in AI are starting to pay off. All right, let's get more now. We got Anurag Rana joining us. He has been looking at these numbers for the past 13 minutes or so. He's from Bloomberg Intelligence. Anurag, what sticks out to you from this report?
Yeah, the Azure number sticks out to us. That's 34% increase in constant currency. That's fairly impressive given the size of that business. And another thing they basically mentioned was it includes about 12 percentage points of growth coming from AI-related workloads. And Microsoft is the only company that's really quantifying it at a very, very, I would say, credible way at this point compared to any of the other companies. So, but at the same time, they're going to give guidance on the conference call. That's going to be in an hour from now. And I think that dictates what happens to the stock tomorrow.
Yeah, and of course, it'll be interesting to see how the market continues to digest these numbers, bouncing around all over in the after hours trade. Talk to us a little bit more about the conference call. I mean, in addition to some more details on the cloud, what else will you be listening for?
Capital expenditures and how much more they're going to spend and what is it going to do for margins. This is the first year where we're going to see Microsoft's operating margin dip probably about 100 to 150 basis points because of all the investments that they're doing. And they need to convince the street that these investments are worth the effort. That means they're going to spend the money this year, and over the next few years, you're going to see that money come back. And I think that's going to be a lot of discussion around capital expenditure as well as growth in Azure.
And of course, we're coming off the heels of pretty strong Alphabet results. I want to talk about the search business in particular. It feels like Bing has been the butt of the joke forever.
Rude.
Is it still?
You don't Bing things?
I don't.
Just Bing it.
Just Bing it.
Yeah, you got a question, just Bing it.
I'm going to start saying that. Are people saying that more, though? You think about all these investments that Microsoft has made in AI in particular. Is the search business seeing the fruits of that?
No, I would not say that. I think their market share has remained kind of in that, same number compared to the pre-AI era. Microsoft made a big deal about it when they launched, their Bing with AI features, and that was the big thing that it's going to take down Google or take some market share away from it. So far, it hasn't happened, but I think Microsoft is making a big noise about it. I also feel they're trying to do this because they may want to get a deal with Apple for the search in that particular ecosystem. So it's a good business, frankly, but that's not what's going to drive the stock. The stock is going to be driven by how the cloud growth is and how stable their office business is.
One thing that was pretty remarkable about yesterday's results on Anurag from Alphabet, the parent of Google, is the cloud growth for that company. And Mandeep was in here reminding us that when it comes to the cloud race, you got AWS, you got Microsoft, and then in third place, you have Alphabet. So you're focused on Microsoft, the number 2 player when it comes to cloud. Why does somebody go to Microsoft, that somebody who isn't OpenAI, for example, why do they go to Microsoft instead of going to AWS or Google?
That's a very good question. And, if you go back to the history of cloud, AWS was the first company that really championed the cause of public cloud services. Then Microsoft came and said, listen, go back to the companies that have been doing a lot of tech spending and say, you already have a lot of your workloads on Microsoft's products, which is Microsoft servers, Microsoft operating system, and databases. Why don't you port over that workload to my cloud? So they really sold a lot of services as a function of hybrid cloud services, and that's really their bread and butter. But when it comes to AWS and Google, they're going after startups and trying to get more money from them.
How do you gain share in the cloud business? Is it a game of inches? I mean, what does that look like, that competitive landscape?
This is probably the most important thing we try to tell people, that, if you go back and look at 10 years ago, AWS has held its market share just in the cloud infrastructure space. There's somewhere roughly around 35-40%, somewhere in that range. But the size of the cloud market has become so big. When it was about 100-200 billion at this point, this is probably 600-700 billion and above at that point. So the whole market is growing. And I think one of the places where people don't talk about, because of Gen AI, we think cloud growth is going to be even bigger. So in our view, all 3 companies, and for that matter, the 4th vendor, Oracle, they're all going to make good money over the next few years because it's easy to run those AI workload and experiments on the cloud rather than doing it on premise.
Okay, so is there anything we should be focused on in these results that don't have to do with Azure or the cloud?
The capital expenditures, I think, you can talk about gaming and a few other things, but to be very honest, the valuation Microsoft and AWS and Google have at this point, it's largely driven by how they're going to monetize the AI investments. Everything else is secondary. The good thing about Microsoft is it has the Windows operating system. It has Office. That provides a lot of cash flow where they can invest without investors getting worried about it.
Okay, Katie reminding me throughout the day that 20% of NVIDIA's revenue comes
like
from...
18.9%,
okay,
but close enough.
Almost 20% of NVIDIA's revenue comes from this one company, Microsoft. Another roughly 10% coming
10.1%.
from Meta Platforms. This is according to the SPLC function on the Bloomberg terminal, Anurag. How should we think about CapEx from... And look, I know you don't cover NVIDIA, but how should we think about CapEx spend from Microsoft? Also, what we heard from other companies this week with regard to NVIDIA, because that's certainly a focus for us and for our audience this week.
Yeah. And again, it's very difficult to tie at what part of CapEx is going towards data center, what is going to GPU. But one of the analysis that we did in recent weeks was, so from 2003 to 2005, we are looking at an increment of $90 billion from the likes of the top cloud providers and Apple and some other companies. And a lot of that is going to build the infrastructure. I think one of the things that can, bring down some of the AI craze would be when all these companies say, we're not going to be investing as much as we did before. I think that brings it down. But so far, what we have heard, investments are just ramping up right now. They are not slowing it down.
Okay, we got you for a couple more minutes, so I want to make sure we continue to pick your brain before you have to go and write this note, Anurag. But give us an idea of what you'll be listening for on the call a little later today, and how you're thinking about the note that you're going to end up writing tonight or tomorrow.
Yeah. So when you look at Microsoft results, again, the question is going to be, where is this growth coming from? Is it coming from directly the AI workloads, or is it coming from non-AI related cloud spending as well? Because that matters a lot for AWS, which is going to report Thursday night, because AWS does not have that level of AI related revenue coming in at this point. So there's going to be a lot of discussion whether Google and Microsoft are taking some share away from AWS or not. So I think over the next day or so, we get a big clarity that have we seen a big push in all cloud spending, or are we seeing some kind of a market share shift? I think it's all the vendors are going to benefit from that. But I think for us today, when we are listening to the call, the question is going to be, where is that spend coming from?
Okay, and before we let you go, one more question on Amazon tomorrow. What's the most, obviously AWS is important, but given what we heard from Alphabet and what we heard from Microsoft, what's your expectation for Amazon and AWS tomorrow?
Now, we should see an improvement in growth rate for AWS, because after these two companies, if they don't report that, I mean, to be honest, that's not going to be good for them.
Yeah.
I don't think that's unlikely. But at the same time, we also want to know what's going to happen with their margins. We have heard a lot about the company, trying to rein in extra expenditures, trying to boost their margins. At the same time, they're investing a lot in Gen AI. So I think those two elements, almost for every cloud company or any software company right now, are what's your Gen AI contribution and what is happening to your margin structure.
Anurag Rana, Senior Technology Analyst at Bloomberg Intelligence, joining us from Chicago.